The dollar has been falling down for the last few months, and as you know that the interest rates have been cut, and it has been slipping. It has been like finding a support at a certain level, but it still has been slipping quietly. So let's see what kind of level it can reach, or is it going to bounce up very soon? What kind of scenarios are available? Let's find out in this analysis. So stay tuned. Welcome back to this analysis of dollar index at DXY. My name is Vic. I'm the founder of Vikinsa Capital Management. Hope you're well. It has been quite a long time since I covered the dollar index, but I've been posting about this on LinkedIn and Twitter and Telegram groups. So you'll find the description, or you'll find the links to those in social media channels in the description of this video. You're most welcome to join there. Those are free. Now, what we are going to do is look at dollar from higher point of view, higher time frame point of view. So if I look at the previous 6 months time frame, I'm looking at 6 months time frame, and if I look at the previous 6 month candle here, that is a bullish engulfing candle, and that was actually kind of, so far it has been nullified by a bearish engulfing candle. As you can see, this is a bearish engulfing candle looking over this one, which means that market is currently bearish. However, things can change because the 6 month candle has not completed yet. It can still bounce up, and it may stop actually being a bearish engulfing. It can completely change as well. So what we have is just see what market can do and trade what we see. It's not about making a prediction. It is about finding exact levels and creating scenarios in trading. Okay, so right now this was a very huge rejection. The market created a bullish engulfing candle. That means the market is expected to go higher, but it actually started to fall down, which means that either this candle is going to become like a non-engulfing candle, or become a bullish candle, or the next one is going to be bullish candle. So something around here is expected to be slightly bullish again. However, what we trade is is what we see. So right now this is bearish, obviously. If I go to 3 months time frame, why I'm looking at 3 months time frame, because we are just about to finish the third quarter of this year, and that is why I'm releasing this analysis. So if I look at 3 months candle, the market has been falling down, straight down, and now it is reaching a certain level where the price has been finding previous support. As you can clearly see, previous candles have finding support here. So this can actually push the price back up, and it has been finding support there, even though this candle actually was started to form even much before the interest rates were cut. So after actually interest rates were cut, it actually did not do much. It actually has been just finding support there. So if I show you the weekly time frame, on the weekly time frame, since the interest rates were cut, it has just been going slightly downwards, where it still has been finding support here. Why is that? Because we have 200 SMA, 200 moving average, plus this is the kind of support area, and we still have this area around here. So the market is still sitting at the support level, and if we find a good confirmation here, it can still bounce up. And if it does that, what you can expect now, this is one of the possible scenarios. This is not a prediction, one of the scenarios. If the market continues to go up like this, as you can see that this has formed an M pattern here, okay, which I posted about a few weeks ago on social media. Now, because of the M pattern, it actually bounced up. Now it is coming back down to possibly test this low, or go slightly lower than this, and then it can bounce up again. And if it finds enough strength, then it can continue to rise up to form a W pattern. So beware of this scenario that the market is still at a support, and it can still fall down a little bit lower to create a fake breakout, or something like bear trap, or something like this. Okay, now that is kind of neutral or bullish scenario. If the market continues to fall, if it continues to fall further below this and rapidly, then what you have is this scenario. You have this bearish scenario, which is basically saying that the market is kind of creating an M pattern. Once the market has broken and confirmed the midpoint of this M pattern, it is going to fall further down. okay, like this. Okay, I do not expect that to happen anytime soon, personally, but that is just my opinion. Why is that? Is the reason behind this is very, very simple, because there is a very important FCP zone coming after this. So if the market continues to fall down, let's say, like, the current level where it is standing right now, or the previous support level, which is around this area, which is around what level here, approximately 100 level or so. Okay, it can come down below 100 just to, like, create a fake breakout, because 100 is kind of psychological level, right? So beware of that. So where it is standing right now, if it does not actually return to the bullish side, it can come and create a fake breakout below 100, and then it can bounce up. So that is the second one. And if that also does not happen, then it is expected to come into this FCP zone, which is running between 98.98 and 98.0. So approximately that area will be a very good support, and that is an FCP zone, and that FCP zone can actually push that up to form this W pattern. Okay, if that FCP zone is going to fail, then we will have, like, few intermediate areas which are available in our premium analysis report. If you are interested in ordering one of that, please contact us on Telegram or other social media channels. So there will be few interesting areas around here which can act as support or possible targets for short. However, if it continues to fall even further down, then what we can have is, like, as I said, we can have an M pattern which can complete around 94.656 or slightly lower. So you see, just to revise, what is happening here is that, the market is kind of running in a consolidation, okay. But what you will also notice, that market created an impulse to the downside, then impulse to the upside, and since then the market has been running in a range. You see, that's the top of the range, that's the bottom of the range. So what the market has come now is actually to test the lower of the range. So whenever the range is tested, usually, like, the market starts to bounce up, or it goes, like, slightly lower than range to create a fake breakout. So that is why it can still be bullish from here where it is standing, or slightly lower than that. If it continues to fall, then it will fall down to FCP zone, and then it can bounce up. And if it picks up momentum in either of these situations, in any of these situations, then it can continue to rise up and create a W pattern. And if it rises below this, then it can form a bigger W pattern, which I posted about several months or last year, or maybe a couple of years ago. Okay, so this is, like, these are all the support areas. And if the market continues to fall down, then it can reach this particular level, which is going to be approximate um, completion of this M pattern. So this is what we had on DXY. Let's, like, talk about few other markets right now, because DXY is a basket of currency pairs, USD based currency pairs. So let's look at, like, GBP USD. I posted this on Twitter and Telegram just just a day ago. So what you will notice that, the GBP, you actually had a very good run, right? It has just been rising. See, it was multi-decade low, and since then it has just been rising. Okay, and in that process, what it has done is actually has created a very nice structure. The market has been falling down, and then it just started to go up. So you see, what we have is actually a kind of, like, pattern developing. And once you place the previous leg onto this becomes a W pattern, and this W pattern has just completed. I posted about this on Twitter, so you are most likely to find it there on Telegram group as well. And because the W pattern has completed, it can actually start to reverse a little bit, or at least have some sort of correction, which we saw towards the end of the last week. Now, I'm not saying that I know it will just start to fall immediately, because we are looking at weekly time frame. It can take few weeks, or it can, like, still go up and then fall down slightly more, like that. But this pattern is complete, so beware of that. GBP USD can actually start to fall down because it has completed a W pattern. And if GBP USD is going to fall down, because this is the one which has been, like, kind of pressurizing dollar to stay down. If GBP USD starts to fall down, which means that DXY can start to push up. So beware of that. Okay, so this is what we have on GBP USD. Now let's talk about Euro USD. On Euro USD, this is I posted about this is I posted on I think Thursday or Friday last week. You see, again, Euro USD, there are two things, or two or three things here on Euro USD which are very, very important, and I'm looking at higher time frame, so do not take it as, like, as a smaller time frame analysis. But you see, the market actually came to this parity level at 1.0 level. Okay, now this is a very important level because euro USD has not visited this again. So I'm expecting that at some point in time the market is going to come down to this parity level and then bounce up. Okay, until then euro USD can actually go up or down, whatever, but I'm expecting this to happen at some point in time. Like do not have any kind of timeline when it is going to happen, but it is expected to happen because this is a very important area. Okay, so right now what market is doing is something like this. It has completed a kind of W pattern here, which means that market can fall down. And you might have noticed that euro USD has been falling down. So if I show you smaller time frame, it fell down because of that pattern which was completed. Okay, and there is a bigger complex pattern which I was actually teaching in my FCP strategy class as well, that there is a bigger complex W pattern which is extended as well. So when W pattern completes, the market falls down. So that's what happened. Now the market has gone back up and it has not been able to close above this or violate this particular structure, the previous high on daily time frame, which means that it can still fall down until we see a confirmation above this. We can still stay bearish below this level, and if it continues to fall, then what can happen is that it can form an M pattern like this. And if euro USD starts to fall down like this, then DXY can bounce up. So beware of this scenario. We need to trade what we see, right? Do not fall into the trap of like following the news and everything, like media and everything, right? Because if the media was correct, then dollar should have like fallen down by higher degree by now because the interest rates have already been cut. And if you see that the dollar has already been falling down, right, right, before the interest rates were cut, and like dollar has been rising when the interest rates were like when the interest rates were being increased. So you see, like it doesn't always like work like that. So trade what you see. Okay, so other words, dollar is still at the support, and there are few levels which you should be looking at, right, which I gave you, and further refined levels are available in our premium analysis report if you want to order that. Okay, so I'll see you in the next one. This has been long time, I know, but I will try to like keep you updated on this analysis of dollar index, euro USD, and GBP USD. Hope you enjoyed this analysis, and if you found this useful in any way, please make sure that you hit the like button, subscribe to the channel, and share it with other traders and trading communities because they can also benefit from it. And I'll see you in the next one. Have a great time. Thank you for watching. Find and follow us on these social media channels.